All right, let's talk a little bit more about this. Here to break down the inflation print, we want to bring in Claudia Sahm. She is a former Federal Reserve Board economist, also chief economist at New Century Advisors. Claudia, it's great to have you back here on Yahoo Finance. So first, I'd just love to get your take on this print, slightly softer than expected inflation, and then coupling that with the jobs report that we got out last Friday.
Right. So we're seeing more of that slow progress. It hasn't been steady on inflation. It's been quite uneven, but it is good to see some progress in the right direction. And I think that's the big piece of this is we've been in a very wait and see on the inflation front. And that's very much where the Fed is lined up and how they're reading these data. So it is a bit of a breather to get some, not bad news this morning, but it's really not a game changer. It's a lot more of what we've seen with, the month to month volatility mixed in with it.
And so all this considered, we were talking about what the probability looks like for us to continue to see some reports that moderate, but ultimately don't get so close to the Fed's goal as to say that they can firmly say and declare victory on inflation. How are you reading through prints like this and your expectation for where we could see continued moderation?
So I expect we're back in a place where we were early last year after we got some disappointing inflation news, where the Fed really set a high bar for having confidence that inflation wasn't just coming down. Remember, it's not just about it coming down. It's about it getting to 2 and staying at 2, and not necessarily on CPI. That's, in the Fed's preferred inflation target. But I mean, they really want to see sustained progress, and they put a high bar. And then that means you have to wait. It's not about 1 month of good news. It's not about 2 months of good news. You really add it up. But the Fed, they took time. They got the news they wanted on inflation. We saw the labor market wobble some late in the year. And then they started in September and did a full percentage point of cuts. So just because we're in a waiting game doesn't mean we are in a stopping game. It is far too soon to say, well, the Fed is done or there's no cuts coming this year. I mean, this still points us towards an easing cycle. We are making progress on inflation. It's just very slow. So, this is not, cuts are not coming later this month, but that doesn't mean they aren't coming later this year.
Claudia, I'm curious, when you take a look at the resilience of the labor market that we've seen, when we take a look at consumer spending, there has been sort of this thought out there that maybe those two things, those two factors could be a threat to disinflation. Does this print almost prove that wrong? It isn't necessarily a threat to disinflation at this point?
Well, two things. One, I think, a piece of the win on the disinflation that we saw today is we are making progress on shelter, right? And that has been we have waited a long time to see that inflation come down. So it is newsworthy that shelter does not feature prominently in today's release, right? So we have a process that's been going on for quite some time and we're making progress. Now, on the side of the resilience in the labor market, the resilience of the American consumers, I think where that has caused the fly in the ointment has been the speed at which inflation has come down, right? People are more price conscious than they have been, but a good paycheck means you don't have to be quite as price conscious, right? And so I think there we've seen some speeds of adjustment, and we certainly have seen some discretionary areas. Travel has been an area where we've seen some pickup, some firmness at the end of last year. And yeah, I think that is where we see it. But to me, that's more about the slowing us down towards back to normal, as opposed to getting us stuck or throwing us off course at this point.